Hello, Pace. How you, Kevin? How are you, Patrick? How's it going? Ash, thank you for that article. Just want to show it quickly to everyone. It's from Martin Armstrong. Isn't this a familiar face? Gary Cohn. When he was president of Goldman, he went over to Greece and cut them deals. Interesting. Thank you, Ash. So Ash left a link there if you want to take a look at it. Draghi was a president of one of these banks. Anyway, very interesting article. What do you think the implication of it is, Ash? That eventually all these things that happened 9 years ago are going to blow up, rear their ugly head again? Okay. Thank you, buddy. Thanks for the share. So good motivational Monday to everybody. Okay. And I want to start off with the euro. Everyone motivated to have a good week? Give me a Y if you are. I know I am. And I have a great interview today. Anyone know Silky from Twitter? Guy's a real Nobel Peace Prize winner on Twitter. Helps a lot of people out, giving spirit, people-centric values, and great trader too. At the last high in gold, when everyone was screaming, breakout, breakout, I know he was getting short. Marvelous Monday to you too, Simon. So last week I went over what I do and how I use ForexAnalytix. And looking at this euro right here, it still looks neutral. My preferred scenario in euro would be for one more drive down towards 1540 to give me a 1. Confirm low. We diverge down here. And I'd like to see one more flush. Maybe the pound drags it down there. One more break towards 1540 for a third drive that could set up a nice buy for sharply higher levels and perhaps the high in the dollar index. If we finally take out those stops above 95.20, I believe it is 95.10. So I'd like to see one more high in the Dixie. That's what I was looking for last week. One more low in the euro to set up nice. I'd be selling into dollar strength, buying into euro weakness should that scenario unfold. Give me a Y if you guys are with me on that scenario. So just because I'd like a third drive down here in euro, this is what I used to do. I'd say, well, Dale, if you're looking for a third drive, why not short it here and ride it down and make some money on the way down to your third drive? And the answer is because that's not the trade. The trade is to look for a third drive. There's no guarantee that'll happen. In fact, how I use ForexAnalytix, for now Greg agrees. Here's a little freebie Dale action. But if we start taking out this 1730 level, it's going to invalidate this count. So I was looking for a third drive. I noticed that some of the third drive stuff I look for ends up being a 5 or a C completion for Grega. So Grega has the same, looking for the same scenario here. Everyone see that? So over the weekend, that's what I was looking for. I said, I even tweeted it, like to see third drive in euro down towards the 1540 area for a potential long-term buy. And then today I was perusing the traffic light page, which I think if you're going to drive in on the Forex highway, everyone needs a traffic light page, and this is the traffic light page. So you know if you have red lights, yellow, green, plus all the great research and charts for everything. Oh, here's anyone want to see what Nick thinks about Bitcoin here? We had a nice break yesterday. I'll give one more away free. Only if you promise to at least take the trial. All right, Steve will cover that in a minute. Abdul, stand by, be patient. So here's Nick's Bitcoin look. It's bouncing from the 50% retrace. Back above here, you could get new highs. Okay. That's Nick's look. All right, last week I was also talking euro pound. Talked about buying it at the 50% retrace, at the 61.8 retrace. And the thesis was it shows up better on the 1 hour. Do confirmed highs mean anything? And are they actionable enough for you to say, well, we had a big confirmed high here, and markets rarely peak when highs are being confirmed by momentum. So the bet was that we would take out these highs before we would take out the lows. I think the lows were like 87.38. So we haven't done it yet, but just based upon that thesis, pretty good entries and nice trade. And I still think there's a pretty good opportunity that we take out these highs. Everyone remember that from last week? Hope some people were able to capitalize by buying the breaks here last week. This was a little scary Friday on the sell-off Friday, but look at where it held. And of course, we know what the catalyst is, the weakness in the pound. So the pound still looks heavy. That was something Blake being kind of neutral or agnostic about the dollar. One thing he had conviction about was the short side of the pound. So that's working. Guppy's working. We're getting some follow-through selling in the S&P after a couple of rally attempts off the first break of the diagonal triangle. I don't know if they're going to try and hold it again. And you know, I just don't know how you could still be long this market, in my view. Let's take a quick look at the yen, some of the yen crosses. So the yen's trying to hold the lows. I think I had it on a 1 hour, and it on the 4 hour it held a kind of an important moving average right here. So if we could start cutting out these lows here, it's going to look ugly, but you can't rule out in A, B, C. Maybe there's one more rally left in the end. But this is something else Blake was pointing out, as well as Steve, with the Nikkei, that with the Nikkei going parabolic, the yen just couldn't get out of its own way, and a lot of people that bought the correlation and didn't buy the Nikkei bought US dollar yen, and they're underwater now. So bias is negative, but I'd wait, sell rallies. The only bullish case I could come up with in yen is that the S&Ps could mount one more surge, and that we get a 1, we get a 2, and we get one more shot up towards 115. So that's what I see on Motivational Monday. Everyone motivated to have a great week with us. And with that being said, I'm going to toss the baton over to Nostra Volgi, see what he has to say about overnight action in the markets and what he's seeing here. Always clarifies things for me. I could come in here pretty hazy, and after listening to Steve cover everything, I come away with more clarity about what I may want to do. And I do encourage people to join our family, join our trading family, have access to the traffic light page, have access to great work, Elliott Wave by Grega, Harmonics by Nick, Basic Technical by Blake, Candlestick by Steve, and Macro by Stelios on every pair. And we do cover quite a bit. So I could keep scrolling down, and you'll see all the pairs that we're covering. You know how much work that would be for you to do this on your own and have all the significant, you know, do it manually. So to me, saving time is like making money, because in fact it's even more valuable time, because money comes and goes, time is gone forever. And this is going to help you expedite your research. And also, not everyone, I hardly know anyone that is really proficient in all these different methods and disciplines. You know, most e-waivers, you know, they're not harmonic people, and they don't even look at basic technical anymore. And, you know, the word basic to you may mean simple, but simple has perfection and simplicity, and it's been around for, you know, a century, and it's still around. So that is a statement in itself. And then Steve Neeson made candlesticks popular. I use sticks. I don't know as much about sticks as Steve, but Steve knows, and Blake knows, every type of candlestick that you could possibly have out there. So while you're getting good ideas, you're also learning about different trading methodologies. And then you don't have to go out to a store and buy a telescope, because we have Stelios. Okay? Steve's coming on right now. How are you today, Mr. Volge?
Hey, Dale. Good morning.
How are you,
and
buddy?
Have a nice week.
Good morning. Yeah, good motivational Monday to you. So what do you have to motivate our community today? Any inspiring words? Oh, come on, man.
Any inspiring words?
Yeah.
I'm really running out of inspiring words. I'm trying to you know, use it all for myself.
Inspired. Okay, how about this? All right, if you don't have any inspiring words, do you have any perspiring trades that I could sweat out with you?
I think that the markets are turning interesting, you know, since mid last week. And
yeah,
you know, I'm hoping that you know, this time the markets will remain interesting for, you know, at least several weeks, because let's be honest, we've had you know, during the past few months we've had big periods of really quiet and boring markets. And you know, it's not only the fact that boring markets are boring, it's also the fact that usually when you have no
harder to make money, buddy.
No volume and no volatility, two things happen. First of all, as you very well said, it's hard to make money. And the reason that it's hard to make money is that you don't have trends. And usually when you don't have trends, what you have is things that are just chopping around. And chopping markets tend to do the exact same thing to, you know, trading accounts, chop them up, right? So I think since the middle of last week, we are finally seeing some things worth mentioning.
We get some. I know the S&Ps were lower. I haven't taken a look yet. Nikkei following through to the downside. And
yeah. If you remember, I was very clear last week that I said since the very first hours that this type of a reversal is not something that's going to stop at one day. Simply because it transfers a specific mentality and you know, makes people that are bullish to want to take profits. I mean, you know, obviously. On the other hand, you know, gives you know, more incentive to people that were bearish and were not involved to get involved, or people that were bearish and were involved to, you know, to stick with their positions, perhaps even, you know, double up. And I think that what started by a sell-off in the Nikkei seems quite likely to be spilling over. Actually, let me take the charts.
So go ahead, buddy. So I'm thinking back to other prolific bull markets, and when you start fading them and they begin coming off, that one of the most important parts is, you know, say you're short. An important thing to think about, and I know you do, is, okay, it's a bull market, and you know it takes time to break that psychology. So where is the area most likely where the buyer of the break will come in? And if you're short, that could be a target area for you.
Yeah, we'll talk about that. But first of all, let me say that the first warning for a turn came from the DAX. Okay, the DAX remains extremely technical. If you see, I mean, the DAX has been quite easy, in quotes easy, of course, because nothing is easy. But I mean, from a technical perspective, it's been quite easy to read. If you remember, we had even warned that this correction was coming to an end, and a new bull leg was coming back then.
I recall.
And this ascending channel that has kept the bullish trend that started after we broke out from this descending channel.
Right.
Also, gave us a top. I was looking for a top here, for a short-term top at some point below 161.8, and we've actually broken below this ascending channel. Now, having to do with the DAX, let's be honest. By the way, the DAX was also a warning for the following reason, because the DAX started falling while the Euro USD was not climbing. Because, at oftentimes they have an inverse correlation. I mean, obviously a strengthening Euro does not help the DAX go up.
Right.
On the other hand, a weakening or anyhow a stalemate Euro at least doesn't pose any problems for the DAX to keep climbing up. And the DAX actually stalled and started falling while the Euro was still slowly but still falling, and that was a first warning. So the DAX, by the way, is almost approaching like some interesting areas of support. So anywhere between 12,950 and 12,800 is a decent area to find some kind of a support. But on the other hand, I'm not sure how well that's going to work, and the reason I'm not sure is the following. If you look at the Nikkei is showing follow through, as we said, and it's actually breaking one trend line after the other. And unsurprisingly, the rest of the US stocks mainly are lagging. I mean, the SPX, the SPX has just broken below this ascending wedge. The Dow Jones is now breaking this ascending channel. Key level, in my opinion, is 23,250. I mean, for the Dow Jones, we need a daily close below that level to open up.
So much for the gunlet. So much for the gun latch trade of being short S&Ps and long, Europe. That certainly is not working.
For the time being, yeah, for the time being. But, I don't think it's a bad idea in general. The Nasdaq is also breaking from this steep ascending wedge. The IWM is still within what can be interpreted as a corrective pattern, but the fact that it has taken so long and it has produced some very hard sell-offs gives me the idea that it might actually just collapse from there. I mean, it's not impossible. At the very beginning, it looked like a very nice corrective pattern, but the more this takes place.
The community was smart. They kept asking you to look at the Russell because I know they were thinking there might be a top there, and there was no reason to believe there was one.
There's still no confirmation. Personally, I like other indices more, but the more we fail to break out
from major channel, though.
Yes, it's back inside that major channel.
So it's the first one, U.S. market, that has negated a breakout.
The FTSE, by the way, another warning here as well, because the FTSE has failed to break out, although the cable has weakened, and we were looking at it there, and we said that any retest of this area can then push to new highs. We came down, we retested, but we never managed to actually push to new highs. We more or less created a double top here in this area, and if we actually break down from here, I think that's also a very bearish signal from the FTSE. So what I'm trying to say here is that my intuition now tells me that the US stocks are going to play catch up as well. So I remain short both the S&P and the Dow. I'm very, very, very slightly out of the money now. Last week at some point I was exactly at the money. But I'm doing extremely well with my Nikkei short. I'm more than 3.5% in the money already here. So I'm sticking to it. I'm sticking to the rest, and I'm really looking to see some catch up in the US stocks as well, because I really do think that besides being overextended, it's not easy to avoid selling off when everything else does. I mean, I know that they have been decoupled and correlations have been really weird, but I do think that the likeliest scenario is that we're going to see some sell-off from there as well. Now, having to do with the yen that you said, yeah, we've broken below this ascending wedge here as well. It does not show, as it didn't show in the move higher, a very good response to what the Nikkei was doing. On the other hand, the same applies to the downside. I mean, we haven't seen any big moves from the USD yen to the downside, and it still hasn't managed to clear the 113 area. I do believe that it will likely do so, but I would first want to see, a close below 113 to really start trusting, that some of the yen pairs that we've been monitoring are going to do great. To begin with, the pound yen, if you look at the 4-hour chart as well, is exactly at the neckline at the moment. So we are about to have a break there to the downside. Also, if you have a look at the euro yen, we're still holding just above this neckline. So both the euro yen and the pound yen have possible topping formations. Okay, so any new sell-off in the USD yen, I believe, is actually going to break and trigger these patterns. So I'm really closely monitoring them. So here it is. Okay, and even if you don't believe this is a head and shoulders formation, this is still a clearly defined range, and the break below it should at least extend as much, should at least extend for as many pips as the range is. So roughly what I'm expecting to see is at least 200 pips lower if we break that. So I think, other pairs are well positioned as well. For example, Aussie yen. The Aussie yen has already broken below the triangle, but most importantly, I said that if we break below the triangle, I think that we're definitely headed to 85.70 and probably lower than that. But it's not only the fact that the USD yen looks like ready to fall off the bed, it's also the fact that if you see at the Aussie USD is clearly ready to resume, after spending like a couple of weeks in a consolidation. It's ready to resume the downside. I mean, it's testing once again the 61.8, and it looks very, very likely that it's going to break it, in which case I would expect a move to at least 0.75. If you see at the Kiwi as well, the Kiwi gave us a perfect corrective move higher. I had said since a long time ago, since we were down there, that I think that 69.70 is a perfect area to be retested and be rejected from, and that's what we did, and we seem to be breaking below this ascending channel that held this corrective move higher. So I think that the Aussie and the Kiwi are also looking like good sells. So Aussie yen and Kiwi yen are also very well positioned. I mean, the Kiwi yen broke below this triangle support, came back, retested it, got rejected. So why not to new lows? Very likely. So I think a lot of good trading opportunities out there. And most of them are already at critical levels. So I think that some very interesting trades are opening up as we speak. They have started opening up since last week, and it seems like we're going to get some good trades this week. Now, having to do with some of the most popular pairs, the cable I wanted to show, because the cable is currently at a confluence of supports. I'm monitoring this ascending trend line, the red one here.
Make or break time.
Yeah, it's also triangle support, this blue triangle support down there. A little bit lower, we have the 130 level that has, has been critical in plenty of occasions. But the fact remains that I'm inclined to believe, and you remember I said it last week as well, that the resolution from this range is most likely going to be to the downside than to the upside.
Yeah, looks that way. Too many tests of that support zone.
Yeah.
And each rally off that support zone is getting weaker and weaker.
Yeah, same thing applies. My opinion hasn't changed.
Yeah, you're right. You're right.
Gold and silver, as you see, yeah, they look more or less that they want to do the same thing. I have no position here, although I remind you, I have a position in the cable since it's now more than a week. I think it was last Friday, not the Friday 3 days ago, the Friday before that.
I was right for a while in gold, but now I have to admit that I've learned something from you, that the triangle is a continuation formation, not a neutral one. So let me say this loud and clear. It's cathartic. Everyone say this. It's so hard to say. I was wrong. Everyone say that. You'll feel better. I don't know, and I was wrong. And if you can't say that, you're not real. Okay, go ahead, Steve. Can you say it? Just let me hear you say it once. Come on.
I was wrong so many times in my life. I can't even remember anymore.
Okay, bro. There you go.
That's one of the things you have to accept in this line of business is that even if you are the best, you're going to be wrong like almost half of the times, because if you have decent risk management, even if you've managed to be right 55% of the times, you'll still do good, right? So you don't need to be right like 70% of the times or 80% of the times or 90% of the times. It's enough to be right. For some people, it's enough to be right even 40% of the times or 30% of the times. I mean,
yeah, if you have 3 to 1, if you don't take anything less than 3 to 1 RR.
Exactly. Yeah, for people, for example, that are trying to trade like big reversals with insane reward to risk ratios like 4 to 1, 5 to 1, 10 to 1. Even if you manage to be right 1 out of 3 times, you'll make money. So, this is not a business of being right all the time. First of all, because it's absolutely impossible. Second of all, because, the best you can get to being right, I'm guessing is like somewhere in the vicinity of like 60%. So yeah, get used to being wrong, honestly, and embrace it.
Get used to it. All right.
Yeah, embrace it, honestly.
Yeah,
you need to embrace it, not fight it.
Come here, Wrong. I want to give you a hug.
Okay, so let's. Blake is going to be with us like within 5 minutes, I'm guessing. So let's start having a look at a couple of questions, and Blake will take over after that. Yeah, Luca mentioning the bonds, and thank you for reminding me, Luca, because I forgot. Although I'm checking them all the time. Oops, wrong ticker. Although I'm looking at the bonds, of course, every single day. I keep forgetting to mention them. People don't ask them about them besides you in the vast majority of the cases. I had warned in the analysis we were writing back here that the bond would be turning lower. Whoever is a ForexAnalytix subscriber already know that, because we had a really perfect confluence here. I was monitoring this megaphone formation, and we had this very nice confluence of the resistance of the megaphone's pattern resistance with the 61.8 of this move lower. And actually that worked out perfectly. I mean, it gave us also a very nice signal, because the day we tested that, we actually printed the key reversal at the end of the day, a very nice shooting star key reversal here. And we've been moving lower since. Of course, we're still within this pattern, but obviously the rejection up there, at least opens up the possibility for another push towards at least the support, and we see what happens from there. Don't forget that now we have another more or less confluence of supports here. It's this 61.8 with this support. So we have the 61.8 of this move higher, roughly coinciding with the Megaphon's formation support. So I remain neutral for now, although that would have been a good short, which I was involved with other trades and I didn't take. I should have taken that trade because, you know, I was monitoring it. It looked good, but I was preoccupied with, you know, with other trades, and I had quite a lot of things on my portfolio, as I still do have on my trading, account. So, you know, I didn't take it. But so I really think that, you know, being short or long at, you know, at current levels doesn't make much sense, although it looks good for at least, you know, a move towards the support once again. If that breaks, then we're looking, if I zoom out, you'll see that if this formation breaks, then we're looking most probably for a push down towards 159 to retest this major support area. As you've seen, as you can see here, this area has been of importance since 2015. So it's like a very, very, very important area, and it's very likely that we're going to revisit it. Okay. Early question about DAX and Nikkei. We covered both. Steve Boon's ready to finally break down. That's a full question. Likely, Luca, likely. But, you know, as I said, we're in the middle of this megaphone formation. So, you know, unless you took that short over there, I think, you know, that the reward to risk ratio is barely still there probably, but just barely. Hey, Blake.
How's it going?
Good. How have you been, mate?
Good. With the exception that I got up a little early this morning. I looked at my watch when I was in bed. I'm like, oh, it's near the time that I should be getting up. And I got up and I'm like, oh, it's an hour and a half early. I should be getting up right now. So I'm up a little early this morning, but good. Had a good weekend. I'm
up since 3:45 a.m. So.
Yeah, that makes two of us. The problem is 3:45 was like a lot earlier than my 3:45. Well, a lot.
Yeah, I slept 20 minutes past midnight, and yeah.
Jeez. You know, the Nikkei is still trading heavy, as you pointed out.
Very.
Equity market futures are trading pretty heavy this morning as well. I'm not sure if you took a look at those, but
yeah, we did, all of them.
Okay. Yeah, so the markets are, you know, which is interesting. It's something that we need to monitor because the you know, Monday mornings usually is a pretty good buying opportunity for equities. If you look back, I forget where I've seen it, but you know, you look back recently in recent years, Mondays are usually the days that the market does really well. And then,
that is very true. Although I said, you know, this is of course a personal risk of saying so, is that my intuition tells me that US stocks are going to follow lower the DAX and the Nikkei. I believe this is a good opportunity to at least get some correction ongoing in the US stocks.
Morning, champ.
What's that, Dale?
Morning, champion.
Good morning. Yeah, and you know, Steve, I'd probably agree with you. Going into, you know, this time of the year, we might see a little bit of correction, you know, ahead of the holiday season. It might only last, you know, a week or two. I mean, you know, I look at the S&P and it's like, okay, well, you know, maybe we'll come back down to this, you know, 2,400 or 2,500 support. That looks, you know, doable coming out of this formation. The question is, you know, are we going to go down there aggressively, or are we going to get down there, you know, over the course of a week or two? I don't know that, but it does seem like that the equities are under a little bit of pressure. One thing that I'd be watching pretty closely is this U.S. dollar Japanese yen is we're at the lows of the session right now, but this is really big support through here. You can see all
Great top pick last week, Blake. Great top pick last week.
Thanks. That was last Sunday right here.
Yeah.
It was It worked out. I mean, I'm still short. I'm actually short quite aggressively, and I plan on being more short if we can get a daily close below 113. But 113, pretty important all the way around, because if we break through this support, I think the 200-day moving average is not, and that's not even halfway into the middle of this range either. Excuse me one second, I got to sneeze.
I thought you were like 6'4". That's not short. I thought you were like 6'4". You look pretty big to me. I've never met you.
6 feet exactly, actually.
Oh, really?
Yeah, I am. I'm actually 6 foot.
Right.
For a half Chinese guy, it's not that.
That is a, yeah.
I'm a monster. It's you know what's funny about that is I actually, all of my friends, I'm taller than all my good friends. I'm taller than all my good friends. It's like, it's weird, like how did I end up?
Napoleon did that too.
But talking about the yen, I mean, this is, we're still at the upper end of our range. The 200-day moving average is not even halfway through the range. Halfway through the range is going to take us maybe towards 111. That's all, I think, very doable if we have some sort of correction in equities. It is. The big mover over the weekend and overnight is the pound. The pound's got some issues. As a matter of fact, I don't even know if Stelios is here yet. He probably wants to say a few words about that. Whenever he gets here, he should probably be back. I know he had to run an errand for a second, so he'll be back in a little bit. But the pound is really, it's in a dangerous situation right now. And you can see the pound we were looking at on Friday, like for a move up here, and we just gap lower over the weekend. And there's a possible no contest vote and a leadership vote. And I know like several people that I trade with, and Nick isn't here this morning. We'd ask her as well. But a lot of people have been anticipating a Theresa May quite possibly resigning, but now you have a bunch of Tory MPs that are looking to oust her and call a no contest vote, and they just need like eight more people to sign off on it, and that's giving the pound a little bit of hesitation here, and we're seeing the pound come under a little bit of pressure because her, this is really weakening her hand from a negotiation standpoint as well, and so this Brexit it could get a little bit messier as time goes on. So we're seeing the pound really under pressure against everything. I mean, here's the euro pound. We were, well, you could actually look at this as a triangle. I was looking at it more as a wedge, but we have a little triangle breakout, and I'm not long the euro pound, because this move all happened last night. But you can see the euro pound is really making some headway here. And the pound is getting hit against everything. I mean, here's the pound yen. Pound yen has come under pressure. Looking at possible ABCD there. We have pound Aussie has come under some pressure. Pound New Zealand has come under some pressure. Pound Canadian is coming under some pressure as well. So I think we need to keep a pretty close eye on what's happening in the cable, because in my opinion, if the cable breaks through 130.20 or right through here, that's going to be very problematic for the cable. I mean, because I've had these dotted lines drawn up for a while now. I changed them to dotted lines so you can see them a little clearer as far as the triangle goes. I mean, yeah, we break through 130 and a quarter, and things are going to get a little scary for pound longs. I don't see why we couldn't see 128 or maybe a test of the 200-day moving average at 128.50. That seems all very doable, especially with the way the Bank of England has positioned themselves, and this turmoil we're seeing in the leadership in the UK. So I think it's a fairly interesting situation to watch, and it's going to be, it could be very disastrous for some of these pound longs. I mean, you look at the pound yen, and I picked up the pound yen last night. Just, you know, I actually sent out something regarding the pound if you're a ForexAnalytix subscriber last night. But yeah, we just kind of cracked through all sorts of support after the open, and the pound just looked extremely, actually this is right here, right after the open, right through here, and we've completed a couple a bear flag pattern already, but it looks like we could even do another one as well. So I think the pound is something that it's a currency that everybody should have on their screen if you're trading FX. But as Steve pointed out, you know, and I missed his conversation a little bit earlier about equities. I mean, you look at equities. I mean, here's the Nasdaq. The Nasdaq's trading very heavy today. Right now, the S&P is really heavy. You got all these other. I know we mentioned the Nikkei, but look at the Nikkei right now. Here's a 4-hour chart. This is a very dangerous situation right now for Nikkei bulls. We had the key reversal last week. We talked about this on the week ahead video. Key reversal last week. You can see the weekly candle. That's a very nasty weekly candle. Now we have, you know, bears are really starting to lean in on the Nikkei shorts here, or at least, you know, taking some profits on longs. And we talked about, you know, on Friday, you know, possible correction, you know, maybe looking something like this. Whoops, that's not what I wanted to do. Sorry, over here. Having a correction that looks something like this. And you know, we're already halfway, we're already partial way through it. Oops. You know, you can see we've already picked up in the Nikkei 1.5% of, we were talking about a possible 6% correction last week, and we're already seeping into that. And now that we've broken this uptrend line, you're probably going to see sellers on rallies. So that's you know what it looks like as of right now, and everything else. I think we, with the dollar weakening against the yen, one of the things that we have to keep in mind is this euro dollar is really closing in. And I played it to the long side a couple times on Friday. We're closing in on some areas where the dollar could really get, you know, see some liquidation. If the euro dollar pushes up above 117, I mean, we could really see the dollar come under pressure against, you know, maybe against the yen, the pound. I don't know what's going to happen with the pound because the pound's just trading heavy as it is, but we could see maybe the euro pound making a move higher. As a result, you know, maybe the Aussie pushes back up towards 77 cents because we're at support here. Maybe the Aussie comes back up towards this resistance. The Kiwi dollar, which is also trading really heavy, I mean, maybe the Kiwi dollar stalls and bounces a little bit before heading back down again. But I think the euro dollar, if it actually does manage to get above 117, that is going to freak out a lot of traders that are long the dollar right now. And the dollar index, you know, and I know we've discussed this a lot, but the dollar index is you know, coming back down. It already bounced off of the first test on Friday, and you know, we might have another test of this this trend line support, which is also not too far off from the neckline, Dale. So anyway, you know, like I said, there's a lot of things there's a lot of things working here, and a lot of moving parts, and I think we're, you know, in fairly dangerous areas for the dollar, and the market could really start to make a little bit of a move. Let me see, got a couple of comments. Ronan has a lot of comments about oil. It says oil's holding up really well. You know, oil, you know, I think oil is holding up well. And I've actually, I've been thinking that we might get a little bit of a correction here, especially after this, this shooting star from a few days ago. But really, I mean, you look at oil, you know, this is just a nice little consolidation here, which, heck, you want to put some you want to put some downside pressure on the economy is you know, get some more inflationary moves in crude oil, and then you have, you know, prices at the pump start to increase. That could really, you know, crimp the consumer. But yeah, crude's held up very, very well. I've been impressed. I've actually, what I've been looking for in crude, and it hasn't come yet, and I don't know if it's going to come, is maybe a move that looks like this, you know, I'll pull back to the breakout point around $55, but no, we haven't seen that yet. Arif says, May is an idiot, but there's no alternative. Boris should be prime minister to take on the EU and Brexit. And I think that's, you know, I think that's probably the general consensus of a lot of people in the UK. But is there another choice? Is there, you know, and I think that's where, you know, the question you know, of leadership comes in. Is there another choice to take on the Brexit negotiations? Dale, are you there? Making sure I'm not just speaking. I'm not
here, buddy.
I'm here as well. I can hear you, Blake.
Oh, okay. Yeah, you guys went completely dark. So, stuff's like broadcasting, and yeah. Hey, look at the NASDAQ.
I'm trying not to interrupt it often. I wrote that down on my desk. Dale, stop interrupting everybody.
Oh, you did?
Yeah.
Oh, no, you can interrupt me anytime you want. I don't care about that. Yeah, right. The people that you're interviewing, you know, maybe that's where you want to let them speak a little bit.
That's where I do all my interrupting. Yeah.
Yeah, you know, for me, you can interrupt me all you want. I don't really care.
Okay.
But you know, yeah, if you have anything that you want to throw in there, feel free to. You know, what I'm since we're looking at the yen, and I think the yen is really, you know, this is a dangerous, you know, area for the yen, especially if we get below 113. I think it's imperative to, you know, take a look at some of these yen pairs. Like you got the euro yen. I mean, the euro yen is bouncing, by the way, but the euro yen is still very, very close. And actually, what I should do here, let me delete some of this stuff because it's really quite messy. And what I was looking for is I was looking for a little bit bigger bounce in the euro yen up towards like 132.80. Actually, when we left on Friday, when we closed on Friday, we closed up around here. I told everybody in our chat room, I said, hey, I'm gonna try to short some euro yen on Sunday night, Monday morning at 132.80. We obviously never came anywhere close. We kind of rallied to 132.60 and then we came off again. But I was really hoping for a move up here, because what I think we're playing is in some sort of downsloping channel. Since this trend line connects all these lows through here, and actually it looked better. It didn't transfer very well over the weekend. Looks like this, like that. And so what I was hoping would happen, and you can see these two little spike highs here. I was hoping we'd spike up towards 132.80 and I could establish a short up here. We might still be able to do that. It's, you know, this is just very messy, but that's what I'd like to do. Is I'd like to establish more of a position, you know, add to my current short position in the euro yen way up here if I could get it. Just hasn't materialized. Obviously, we looked at the pound yen, and the pound yen is, you know, is under some pressure. Aussie yen too. I mean, look at this Aussie yen. This is one of those that has prohibited me from trading the Aussie New Zealand to the long side. Is this Aussie yen, and you can see we came out of this little minor triangle, we broke lower. So, you know, in the Aussie yen, if you want to, you know, relate it to, you know, risk on, risk off, I mean, this might be suggesting that we're probably going to continue under some pressure. New Zealand yen is also the New Zealand yen has been very well behaved. You know, when we are analyzing charts, what I really, you know, aim to do is I aim to find a currency pair that is technically well behaved, doing what it should be doing. And like the euro yen, for example, is not very technically behaved right now. I mean, other than it's holding the support really well, it is choppy, to say the least. But like the Kiwi and this New Zealand yen was a really perfect rally the last couple of weeks back to the underside of the trend line, the 38% retracement, and it's rolling right back over, just like it should. You know, unfortunately, I didn't get short the New Zealand yen, which I, you know, thought about it on multiple occasions last week. I just didn't do it because I felt like I already had too much yen exposure. But that New Zealand yen has been working out, you know, pretty much by the book. Canadian yen, I guess we could probably do that. You know, Canadian yen's under a little bit of pressure too. You know, and this is one of those things that if the Canadian yen is breaking down, you also have to be careful shorting the US dollar Canadian, because if the US dollar Canadian, which actually has found support right at this breakout point, and it was also a 50% retracement, you can see right there. We found support here and we're bouncing. That also feeds into a weaker Canadian yen. And so that all, you know, that all makes perfect sense. Barry says the South African rand is moving fast opposite to the dollar on political, treasury, ESCOM, cash issues, default concerns. Let's take a look at the South African rand. Actually, I haven't looked at it since last week. And man, this rand, yeah, that's a nice push. I guess the question is, because I don't like to chase. There's no way I could be buying this right now. Take this high to low here. I mean, we're above the 38% retracement, so it seems like 15, a move back to 15 is very likely, but like I would have a very difficult time trying to buy it right now. I'd have to buy some sort of dip if I could. Okay, here we are. And yeah, I mean, I'd have to buy a dip back to like 1440 if I was going to trade the rand long, and it may not even pull back. I mean, this thing may just continue higher, but that's how I'd play that. I don't like buying things as they're surging like this. This is probably 127% extension. Actually, we're closing in on the 161% extension here. Glenn says, Blake, you look at 60-minute and 240-minute. When and how do you decide? Thanks. Well, actually, what I do is I start off my day personally. I start looking at the daily charts, and then I make my way backwards. So I look at the daily, and I look at the 4-hour and the hourly. What determines whether I make my decisions on a 4-hour chart or an hourly chart usually has to do with the longer term positions that I'm looking at. If I see something with a very favorable, like longer term setup, like here's the pound, okay, you know, with a longer term setup, and like let's say the pound, and I'm just using this as an example, let's say the pound dollar broke 130 and we close below 130. Then if we close below 130, then I might not need such a small minute light, like or like a 60-minute or an hourly. I may not need that precise of an entry, because I know that it's closed below 130, and I know over the next probably few days we're probably going to travel back down to 128. So I might just use a 4-hour chart to gauge my entry. But it really depends, you know. It depends on that longer term chart. On the longer term chart, if I'm not seeing any clear picture, I might find a clearer picture on an hourly. And then if I'm making my decisions on an hourly chart, the length of time that I stay in that trade may not be for days or weeks at a time. It might only be for the day. So, you know, that longer term chart really helps me decide, you know, how deep I really need to go into the charts, but you know, how deep I need to go into the minute charts. But again, if I see a big development on a daily or a weekly trend, I'm not so concerned at the hourly charts, because, you know, I know that I'm going to get in and probably stay in for the next few days. So if that made any sense to that's Gwen. So Rona, you have a lot of comments, so I'm gonna have to just kind of pick and choose here. You asked about the peso. The peso, you know, this is one of those currencies that you know, we're kind of breaking out of this triangle here, but I don't know if I trust it. And the only thing about the peso that I keep thinking is I'm careful of shorting it, even though we're hitting this 38% retracement. I'm a little careful about shorting it, because if we do get some continued risk off in the markets and equities sell off, will emerging markets come under pressure, or emerging market currencies? Typically that happens, and so that's one thing that's kind of prohibiting me right now from trying to play the peso to the long side, because if we have like a 0.5% down day in equities, that could have people shunning the peso and other emerging market currencies. So that's my thought there. But I don't have a lot of views on the peso, other than, you know, it looks like we're breaking out of this triangle, but we're also at a very key 38% retracement on a much longer term time frame. Era has asked me to check the euro dollar. Sure, I mean, like I talked about before with the euro, I think it looks strong, and I think the euro dollar is going to squeeze. Personally, I think a lot of traders are short euros and they're long the dollar, and I think they're going to get squeezed. And I don't know how high the euro can go. I would think that 118, 119 is very logical. But I think we end up squeezing past this neckline and making our way back up towards the 118, 119 level. And I'm not long the euro dollar. I bought it and sold it a couple of times on Friday, trying to play it long. But I've got written down on my notepad that you know, we break 117, and you know, I got to start thinking about being long the euro dollar. And
yeah, I mean, Blake, you were skeptical of this head and shoulders breakdown, and then as days went by, it's just giving people too much time to sell a major breakdown. It's like saying, okay, you missed the breakdown a week ago. Here, a week later, I'm going to let you in at the breakdown. You know,
right?
It's taking too long.
It is taking a long time, and people that's going to make the shorts, or you know, dollar longs, U.S. dollar longs, it's going to make them really nervous. And then when you see the dollar yen under pressure, that's just another event that's probably freaking out some dollar longs right now, and because they're thinking, well, if the dollar yen continues to break lower, you know, when's that going to affect my euro dollar? When's the euro, you know, if the dollar is really under pressure against the yen, is it going to translate to being under pressure against the euro? And I think that's the risk for euro longs right now. From a risk reward standpoint, it makes sense to be short. You know, like right now, it makes sense to, oops, excuse me, really quick. It makes sense to be on the short side of the euro yen or euro dollar, but I'm not gonna do it. It's not because because in my mind I still think it's going higher. So, you know, that's the way I'm viewing it right now. Dale, you're interviewing somebody that's going to be looking at gold. Is that correct today?
Well, that's how I noticed Nick.
Okay.
So yeah, and invited him back. I think
Awesome.
back in September.
Awesome.
So he's got a pretty good following. His handle is Silky FX Dynasty or something like that. I'm trying to. He's calling in via phone. I may need Steve's help because as I'm trying to make him the panelist, because he's not going to be showing charts, all that comes up is connected to audio. I'm not sure how to make them. Oh, when I have control, I can do that. Okay.
Okay.
Yeah. All right. I'm good. Yeah, but
Right,
he's
cool.
in here, Blake, and standing by anytime you're through wrapping it up. You are.
Yeah.
I guess.
Yeah, I hope you have a great interview. And guys and gals, I think we got to watch the dollar today. Dollar yen at 113 and the euro dollar 117. Those are very dangerous areas for dollar long. So you just keep your eye there. And then obviously the pound. The pound's, you know, obviously doing its own thing too. All right, guys, have a great one. And yeah,
thank you very much, Blake. Thank you. So. Nick, now I'm going to make you a panelist. Well, it doesn't show how to do that, even though I'm showing my screen. It says mute. Nick, can you hear me? Let me unmute you. There you go. Can you hear me?
There we go. Now I can hear you. I've been listening to you guys talk the whole time.
All right, Nick. What a pleasure to meet you.
Oh, it's a pleasure to be on your show. It's funny. I'm all too like this whenever I listen to either my friends conversing about stocks or charts or anything. I just wanted to jump in. Whoever you had on there, I think it was his name was Blake. Multiple times
Yeah.
I found myself either going yep, yep, or no, no, or yep, yep. I just have a problem with one.
Yeah. We Blake has assembled a pretty good team here. You know, one of the best I've worked with. And you know what I noticed? You're a big believer in community. I love your tweets. They're very people-centric. You also, I don't believe, have any axe to grind. You're just out there trading for yourself. Am I correct?
Yeah, you know, there's been a lot of times where I've been offered to be a part of subscription services or whatnot, you know, but I just feel like at this specific time in my life, especially, I mean, just judging by the tweets, you know, you see me make, I don't know if it's, I kind of get off on just helping people, Dale. And
yeah,
it's been a thing in my life for a long time. It's not just with trading. And when I found out that I could do it with this, you know, and this kind of platform just kind of expanded itself into what it is now. But yeah, being able to help people like that. And as you see, every other one of my tweets is more of like a positive, uplifting. There's an armchair trader for everything, every currency, every commodity, blah, blah, blah. But you'll never have someone kind of tying it all into more about life as well. Because if it was just about this, Dale, I would have offed myself a long time ago.
Yeah. In fact, here you go. Here's one here. Optimism is a choice. Happiness is a choice. And then look at all the people that respond to your tweets. So
yeah, it's funny, Dale. I get more response to that than I do anything, even the private messages. Sometimes it's people gravitate towards that. It's once you see the response that I get from it, it's kind of like, why wouldn't you do that and do more of it? Because people need it in their lives. They're so tied down by this system we're thumbprinted with. I mean, we could go down the rabbit hole for a long time. And that's why I said I 100% want to come back on where we can talk about a whole host of issues before we get, you know.
Okay, well, you know, that's a great segue. So you said you know, this is kind of like in your DNA before you even got into trading. And I always ask people how you got involved in trading and what was the catalyst and what was the beginning of the journey like?
It's funny you brought that up because I was talking about this with my business partner last week, and I don't know why it's come up so many times in the last few months, but it has. And Yeah, I don't know about other people's experience, but between my group of friends, at least are traders, we like to call, you know, your trading education, your university. I got blown out 3 different times before I even made it. Back when I worked.
Great transparency.
Yeah, we can start just real quick to give it without going too, you know, make a long story short. Back in college using, let's just call it quote, hustled money when I was in finance and accounting school at CU Boulder. I probably put all that hustled money into penny stocks, even though I knew, right? I got the first iPod and I looked at it and I said, I should put every dollar, this $10,000 into Apple stock. You know, this is back in 2000 and 2001. And instead, of course, I put in penny stocks, got blown out of every position.
Well, okay, so tell me how, did you have to get hit in the head with a ball-peen hammer, with a ball-peen hammer to know it hurt? And how did you overcome your inclination to want to hit home run balls?
It happened, Dale, so many times. It happened again at 24, blown out again. And then when I was working in private banking, and then when I retired and was able to recreate a nutritional company with one of my best friends, ended up coming back to the market at 27 years old, got blown out again for another, I would say 20 to 25 grand. And then when I was 28, came back with 13 and a half and turned that into 7 figures. And that was my 4th time coming back to it. And I honestly wanted to give up. People think that, you know, they see some people that have a finished picture, a finished understanding of trading and trading commodities or, you know, any different kind of market. And they see it as, wow, that person went from 0 to 100. It's never like that. You know, you get whomped on so many different times. And I continue to have the lessons, you know, and any trader, whether it's in any kind of market, will continue to be like, just when I thought I didn't know this happened, right? I was on a clear trade, and then boom. And, you know, it is what it is. But if you can make it through that without getting completely blown out of the water, then you know, you're okay. And I didn't do paper trading. I probably would recommend that to people. As you can see, Dale, from some of my skiing stuff, I'm a very risk-averse personality. So that kind of translated right to my trading, where most people through my life and a lot of things will have to kind of sack up to pay to play, so to speak. I was the kind of person where I'm gonna like put it all down and get whomped on and have to use more risk in my strategies going forward to not get blown out, right? Taking losses quicker, letting my gains go. So
okay. So I noticed you, I'm showing a gold chart here.
Yes.
Nick, I noticed you, and it was back in September, and gold was trading up around 1330 or so, on its way to almost 1360.
Yeah,
and you were beginning to buy. Yeah, you were beginning to buy bearish gold ETFs. I think Dust, and you know, some of those.
Right around 1350. Yeah, is when I went.
Yeah.
You know
What did you see up there
that
made you bearish? Because you know, I was getting confirmed highs on momentum and everything. There was nothing I really saw up here to make me bearish. I'm wondering what you saw, and what were the contingencies that got you to take that contrarian position?
Okay, so yeah, you know, that move reminded me of the exact move we saw after the election, but a blowout low. You know, the indicators coming off of 2016's gold and gold miner season, to have that kind of trouncing happen after Donnie got elected, and literally just paper shorted the metal market.
Donnie Osmond?
Yeah, Donnie Osmond, after Donnie got elected, and they paper shorted it into oblivion, right? And I remember some of the miners just getting destroyed after having such a good year. The indicators hit, you know, completely oversold positions, and same thing, all of Wall Street, all of CNBC, Pumps R Us was massively bearish. We are 100% going sub 1,000 gold, and that's when, you know, just load the boat. Same thing on 1358. We actually, Dale, when I was charting it, if you look at it, because you have a perfect chart up, when it hit that 1342, 45 area before it made that last blowout move, I thought we were going to actually turn there, and I started adding shorts there. And the only reason we went further was because of that North Korea scare. But so Dale, to answer your question without going on too many tangents on what I saw and gold there, is that the MACD for the yearly. So whenever I trade, especially gold, or am looking at the currency pairs like, you know, the dollar yen, which obviously gold trades off a lot of, I like to see on the yearly, right? Trading
a yearly chart?
Yep,
not
yearly.
You mean not a monthly, but a yearly chart you look at.
Yearly, and then daily. So I'll compare a yearly and a daily so I can get the exact levels. But if you try to go in any smaller, in my opinion, you're just going to get blown out on the day-to-day moves, because you see the kind of games they pull where they'll just either dump a massive amount, you know, to blow out basically the longs, or vice versa, you know, on the shorts.
Yeah, you know, Nick, I say if you can't be wrong for a day, how could you be right for a week?
Exactly.
You feel that way?
Yeah, no, and Dale, that was one of the things that I had to learn, you know, is especially when I trade commodities and currencies, I like to swing them more, because if you're trading against a computer system, right? And the computer is programmed with its algorithm to wax you out of the market. That's what it's trying to do.
Because it has no emotions.
Exactly. Well, and it's that whoever's designing the algorithm is designing the parameters to dominate retail. That's the whole point of it. It's just a siphoning of our wealth while we're trying to battle against the quants that are run by the huge, you know, investment banks and corporations, and, you know, central banks, you know, most importantly. And
so gold's trading down here around the 1280 level. You have a vibe? Are you neutral? What are you thinking in there?
What's funny is it couldn't have been a better time to talk about gold right now. I mean, even just looking at the chart, probably a beginner can see that we're at a huge inflection point, right? We're banging up against the now 1276 that it's been holding the last, you know, what is that? It's been holding almost a month, that level, you know, pop back up and it's come back down. And now naturally, again, like that guest you had on before, Blake was saying, you know, that the whole sentiment is, you know, bullish, the USD JPY, right? Well, for me, I don't know what people are looking at. Like I said, if you pulled up, and you don't have to, but if you looked at the USD JPY chart, not once on the intraday, if you look at a yearly, has the MACD traced into the bearish signal and recovered without falling down first. So what we have right here, right, is that 113.3 level. I think today, see, it's just sitting at, you can see it. Yeah, you're hovering your mouse right now. This is the level. And for the gold bull,
this is a daily. These are, I'm showing dailies for you, Nick.
Yep, no, that's perfect. Okay. That's perfect. Right. So you see that, you know, it hit that triple top again at 114.5, right? And it's now starting to curl down. Well, there's gold bulls that say that, hey, it's okay, we're gonna do a little retracement to 1260 or 1250 and then go. If this turns up, right, if we turn back up and hit that 114.5 again, I wouldn't be surprised if we broke through, and then it's the major pain train for gold. We're nowhere close near a bottom. We could hit 1200 before we hit anything. That's why, as far as a long-term gold bull, which I am, I kind of wanted to see this fail and start heading back down towards I bet we would test that 108 or 107 area on the next, you know, big drawdown. But if it holds, and this is you know, people need to heed that warning. If that holds and turns back up, to me, that chart just turns massively bullish. The US.
Well, I mean, isn't it a possible scenario that the yen breaks to 112, 112.50, maybe even 111 and a half,
and then turns up,
and gold pops to 13.10, and then they both reverse?
Yep, absolutely could. You know, and if it does that, if it goes into that, then we're just back in this channel. You know, it's like Goldman Sachs channel 1210 to 1270 or whatever they predicted for the entire 2017 year. I mean, if that happens, it almost makes you wonder, you know, like anybody even thinks that they're not in full control of this. You know, that's the difficult part, Dale, with these commodities, is that once again, you kind of just have to trade the way the computers are making it go at the moment. Because as you can see, what was it on, was it Friday? right up against the long term. Gold was looking great, and somebody dumped $4 billion, you know, just in one trade. Yeah. I mean, that doesn't just happen with all these other pairs or metals. You don't see it in palladium or platinum or anything like that. You see it as a way to suppress what they want, you know.
Okay. And so you're a believer that the paper market manipulates gold prices so that people don't get too nervous, because a bull market in gold is kind of a no confidence vote on the economy.
I mean, I just, you know, personally, I don't see how anybody could see it any differently. Just from a fundamental standpoint, if you're looking at things like silver, you know, and how much it's used in our daily.
Well, they do it there too. We had some flash crashes.
Silver may be worse, Dale, actually. I mean, where the price of silver compared to what it's used for and how much it costs to mine is it's a crime against humanity, right? Along with the credit agencies and all the other, you know, bullshit. But I don't know how PG of a show this is. Maybe we should.
You could.
Let's get this one, but yeah, there's a lot we can talk about. So yeah, so either way, so gold right now, this is almost like a sit back and see. I had longs at 1276. It hit 1286 or 1280. Yeah, 1286. I got stopped out for half mine at 1280 on the come down. I'm still holding the other half kind of as I'm neutral right now. I mean, if I had to pick a direction based off only what the USD JPY is telling me, I would go short-term long gold. But I'm definitely in a minute camp, but I was at 1358, and I
certainly were up there. And you know, it looks like some of your followers came to the room to ask you a question.
That's awesome.
Someone's asking, what do you think about the crude oil market here, Nick? Lee is saying that he thinks you're short from about the 56 level.
Yeah, so I am. I have a 56.10 average on short, and look at crude. I'm glad you brought it up. This is the first. So oil, I have made more money on oil commodities, or as far as commodity, than anything in 2017. The oscillations it gave us every time when it finally broke through that 52, you know, going down area, when it finally broke 50, I think it was in, I don't know, you maybe could pull it up for me. When was that in? Let's see. Hold on.
Broke through what?
That the March area, right? I mean, these waves, Dale, if I could get every single chart I ever traded to look exactly like this is what I do. When you first get that breakdown to that 47, you know, that was in March, April, that was such a good play, and it just traded perfectly. The RSIs, the STOs, and the MACDs all bottom right there. It's just perfect for long. You got all of Wall Street and Pump Stardust talking about how oil's going straight to 40. Okay, insta long, and then back up. Couldn't even get to the, you know, the 55 mark, and it kind of fuddled down again. And it just, you know, those rolling hills like that, if you ever get those rolling hills on a defined either bearish pattern or bullish pattern, there's nothing better to trade. But so the question,
so on your short position here, I'm going to pull up a weekly, because we kind of had a breakout. Maybe you could call it, are you just looking for a pullback, or is this perhaps?
It kind of got overextended there. What's funny is when I actually, my first short was at 55 or 54.99, and then I started adding up. This will be, I'm on the pain train obviously right now, and there's a darn good chance that I will get squeezed out of this, because I'm only upside down $1.50, or I mean $1.10 right now. Actually, it's only 56.92, so about 90 cents or 80 cents on my average. But I'm not going to hold it into a Saudi crisis, right? This is the first time fundamentals have taken over now in the last year, where, and I'm also not so sure that wasn't intentional, just because they're so pissed about not being able to sell their oil for so much money that this whole, you know, thing might have been fabricated. But be that as it may, it doesn't matter. If it doesn't turn,
you know, I've interviewed a guy named Kirk Spano. Familiar with his work? He's does a lot on energy.
I do know.
Kirk's looking for a hot conflict in the Middle East between Iran and Saudi Arabia and us.
Yeah, it 100% could, Dale. The thing is, so if we're just talking technically, like, you know, I don't know if you know Bama Broker,
Oh yeah, yeah.
He's a
Bama's
great commodities trader, and he has this indicator he uses, which is his XCOM and WTI ratio. And
he's a fan of yours. He's a fan of yours.
That's cool that he is, because I'm a fan of his. The technicals where oil is right now, it's so overbought, it's not even fun, right? All things being equal, with no, major war in Iran.
Yeah, without Armageddon in the background.
Yeah. Oh, we would have come back down to 51 and maybe even lower. But so, I know friends that have covered. I mean, I haven't. It's still, now we're at 56.88. I'll probably cover my short at 50. If it does a blowout move past that 57, like 50 it hit, or 57.60 it hit last week, then I'll just take my lickings and go. But because I've had so many good trades on oil this year that, sometimes that's the other thing, Dale. It's about just knowing when to not get whomped on. That was one of my, every trader I think goes through that is really.
How about a lot of people have a hard time being flat? Do you? Not being involved.
Oh, I can be. I don't like to be in limbo on anything. First of all, I either wanted to make a blue, shit or get off the pot with any of these charts. And we're kind of on that with a bunch of things, oil, with gold, and some of these currency pairs. I heard Blake talking about the euro dollar as well.
What do you think of the dollar and euro? And I know we only have about 4 minutes. Because
that's okay. Same thing. I agree with him. I think the bias is going south. And from the move at 104. I was really long 104, and I rode that sucker all the way to 119 before I got out. And it was that same, that kind of the Donnie move, the election blowout. And now, look at it. It looks like it's hanging on, and people are pitching it to the downside. And I don't know, man. I agree with him, and I think we could see that 118, 119 push, and the dollar go back down to 90. But.
Okay, that's viable. Any view on the parabolic nature of what's been happening in equities before I let you go?
Oh yeah, that's a big.
This is why the bond market.
We 100% have to do this again when we have more time, because I want to talk a lot about like fundamental stuff, like you're asking right now. I mean, so just where equities have gotten on this melt up, this daily ramping of all sorts of, fixed income or fixed assets. When you have the plunge protection team not disclosing any of their trades, for all we know, period, end of story, they could own 10% of Apple. We don't know. We have no idea.
And the Japanese DOJ did it.
Yeah. Oh, so either way, I liken it to, we did a lot of, in the earlier part of our stock trading career, we did a lot of awareness stuff for OTC companies. I liken what the Federal Reserve does and the central banks of buying as nothing but a pump job. It's the pumpers have bought 4.1 trillion in equities or assets across a broad range of things. And now the pumpers want to sell. Right, so they're trying to keep it up. It did them no good when Donnie got elected to crash it. Then they need to get it up first. So the only thing that made sense to me, and this is the point I'm going to leave you with, is that the second.
Well, they were successful for a year now.
That's right. So the second he won, they said, we have to push this thing beyond belief, right? Because why would they want to sell down here, Dale? They want to pump it up and get mom and pop and every other hedge fund in before they pull the rug.
So you think they're distributing now?
So now let me ask you a question. The global elitist period that run a lot of the markets, period, end of story, they hate Donnie. So unless we've seen a major power shift that we, the peasants, are unknown of, right?
Yeah.
Does it sound more likely that they're going to let the thing push to 24 to 25K on the Dow so Donnie can go, look at me, look what I've done, this is all me? Or does it feel like they're going to crash it and lay it at his feet after every one of these tweets and go, what's up now, Donnie? Isn't this you? you know? And for me personally, I can't see how they let him do that, you know, but who knows? The powers could have totally have changed and we could straight melt up to 25K. I honestly stopped shorting the indices except one. I've been short the Russell and IWM since it just went. It reminded me, Dale, of the exact same technicals as 1358 gold. I mean, it was just complete sympathy.
Kind of actually the monthly is kind of a megaphone formation, which is kind of a negative formation, and it's back under its breakout. So good trade selection.
Yeah. So
and
far,
then also, if you're right about the dollar and the dollar gets whacked, Russell does better during strong dollar times rather than weak dollar times.
And you know, to me, it was just a sympathy trade. You know, when any kind of like the shippers start moving, like dries or any of those move, and then tops and all the other sympathy shippers move, or some of it happens in the biotech. The mid caps based on a tax plan are going to go up. That's never going to happen or hasn't happened. Goes up what, 20%? The Russell. I don't know what the Russell's up since election. It's something crazy, right?
Yeah,
so it's just been pulled up with no bearing.
It was like the Nikkei.
Yeah.
So Nick, I want to call you my trading warrior brother now.
You got it.
We know each other, and the only way people could follow you is on your Twitter handle, right? And I have.
As of now, you know, I mean, we might be setting up some other stuff in the future. I have a lot on my plate. I'm in Florida right now, and I run a cryotherapy business out here. We will be moving back home to Colorado, and then I'll be able to trade full time more, and I'll have.
What kind of therapy?
It's a cryotherapy business. They look like you know, those big stand-up tanning booth looking things to pump liquid nitrogen gas around you. So we own that. We own a medical spa out here. So we kind of do also. That's what myself and my soon-to-be wife are in that industry. But you know, trading. I'm just at heart, Dale. I'm just an athletic math nerd. That's what I've always been. You know, people look at me and they're like, "Wait, you just play sports?" I go, "No, all I really like is, you know, gaming and math. Even though I look like all I do is play sports, you know." So it's pretty funny. But I would love to come back on,
man, bro.
And it's been a pleasure.
So,
go ahead.
It was great. And your Twitter handle, just to make sure I have it right, is at Silk Dynasties FX.
Yeah, no, so it's at Silk Dynasty STX, like stocks, right? So Silk Dynasty
STX.
Yeah.
Okay, buddy.
And
all
then,
right, well, thank you so much.
Dale, let's definitely set up another time where we got like an hour where we can really go over some charts and we can really go over some, you know, great down the rabbit hole woo-woo bias, because that's like, you know, I can talk about that stuff forever. I love it.
All right, well, you know, I hope pips rain down on you the rest of the year, and
let's
have a great holiday season, and
I'm all about
we'll do it again, and we'll do it again in 2018, Nick. Thank you, buddy.
Let's definitely do it. Okay, buddy.
All right, thank you, Nick.
Pleasure.
Everyone thank Nick. You can follow him at Silk Dynasty Stocks, STX. And that's a wrap for us today. Everybody have a great day. See everyone for Turnaround Tuesday. And don't just count your pips, count your blessings. And look forward to having a great week with everyone. You too, Ash. See you, Ronan. See you, Jack. See you, Dominic. Adios. Thank you, Steve Olge. Thank you, Blake Morrow. And maybe we'll have Nick here tomorrow to talk about Bitcoin Cash. See everyone tomorrow. Adios. You're welcome, Kevin. See you, Nick.
See you, buddy.